Yeah, today in this today's class, let me share my screen. We will be going through the cost element accounting and followed by uh, cost center accounting. In the cost center account, after cost center accounting, we'll be learning about activity types as well as statistical key figures for today. And then from in next class, we'll be learning about the cost center planning. So this is the agenda. And I think I explained about the cost element accounting in the last class.
Yeah.
Let me echo with the cost center accounting. Okay. So again, cost center accounting, we are well versed. What about the cost centers? Cost centers are used for planning, just like a cost, like storage units, like we can say, buckets of the bucket of for collecting of costs. They're used for allocating, controlling, and monitoring of any overheads in the organizations. And not just that, they're also responsible areas for any cost that is incurred within an organization in any of the units. And cost centers collects the overhead expenditures as well, whether it's from the finance, asset, accounting, manufacturing, or sales and distribution areas. And also it helps to compare the actual expenditure with the plan expenditure to come up with the variance. So initially, in the before the project preparation, we generally plan our costs, and then once the activity is complete, we actually post the actual cost. So when we actually look at the actual cost and the planned cost, we find out the actual variances. Okay, even for that, the cost center accounting is very much important. And next we have overheads. Overheads are generally used in product costings because we have overhead cost that is incurred, which are not directly added into the production of any goods or services. So we actually categorize them into two. Actually, one is a direct overheads, another is a indirect overheads. So this is generally allocated for the product based activities. Or the direct overheads, whereas the indirect overheads are not actually related with the overhead cost, but it is calculated using the costing sheets, this indirect overheads. So next we'll learn about how to calculate these overheads using the activity types and statistical key figures. But before that, we have to create a cost center standard hierarchy. Which is equally important because we need to have cost centers for every specific units within the organization. So we create the cost center standard hierarchy first, and following that we have cost center. We have to create the cost center master data, and cost center master data we have to create. Then we have to create the statistical key figure and the activity type master data. So after this, we'll go with the cost center planning, price calculations, allocation methods, and cost center budget, actual postings, and reports. So, and then also we create the cost center groups. We generally use the transaction code OKEON to create the cost center groups. These are the groups where we group together all the cost centers with the similar characteristics. Like if the cost centers are belong to manufacturing, we create it under manufacturing group, one for the production group, service group, admin group, different groups we create. This is all important for reporting purpose. When you are trying to report what are the cost centers that we have for manufacturing and service, and then we can also use this for allocating of cost, like internally if we need to allocate the cost from one cost center to another cost center, from one manufacturing unit to production unit. So in order to distribute this cost center hierarchy is very important. So cost center group is okay. This explain these groups are used for reporting purpose. Cost center groups are created in OKEON transaction code, and then the other T code for creating the cost center group is KSH1, H2, and H3. Okay.